guys. Okay. Hey guys, my name is Dantes Lindsay. I am the general manager at Ducks Trading LLC, as well as the lead trainer of Stockcraft. Before I go any further, I just want to say I am not a financial advisor, and this content is for entertainment purposes only. With that out of the way, let's go over today's content. Pretty much, I'm going to catch you up to what's been happening in February, what's been happening in the small caps, and how I've reacted / coped with this current situation. So just a quick summary, it'll be something like this. There's small caps that come up, very few short, but they're not ideal. The long strategies, I'm not really scanning for them, but I have been getting feedback saying that there are some out there, and I do recognize it after the situation, and I can see the potential a tiny bit before it happens. So there is still stuff to do during this very long period of no volatility in the small caps. And my general way of coping right now is working on my technical analysis skills, fundamental analysis skills, and just overall trying to read the intermediate trend, the long trend, and the short-term trend. So I'm just going to give you a few snippets from the stream today and just show you how, I got a short, I have a long, what I think about, the overall market right now, and just general trying to get better at trading one step at a time. So let's get into the content. So I'll start us off right here to where I'm pretty much going through the chart on Kinfo, and I'm appreciating the slope in Steven's equity curve, and I go into a few of the trades and I'm like, I really like this risk management. And so during that time, someone asked me, hey, how is the strategy and how is the small caps going to adjust after, the volatility and volume and stuff come back? And I was telling them that, the range that you have to collect with your statistics, it's going to shrink for a bit, but it's going to gradually come back. And we need some type of stability in the overall market to see that first. And before that time, we might need somewhat of a correction. During this, very volatile time, it's really hard to see that because the investor fear has been rising to the point where they don't want to throw their money in the small caps. They rather put it in something more steady, like gold or consumer defense and utilities and etc. like that, large caps. And so in the meantime, I've been working on I already said in the beginning, and that's what brought me to doing options for now. When the small caps come back, I'll come back. So let's look into the snippet.
Swing SPY, you can make 20 to 30% profit a day. Yeah, in a normal, popular small cap market, which comes with either a bullish market or a bearish market. Right now, we're in that the in between where most of the volatility is in the large caps, which means that the fear from investors are not going to go to the small caps. They're going to mostly try to save their money and stuff like that. When the small caps come back, then I'll come back to the small caps. But in the meantime, I'm just going to try to make myself a little well-rounded. But swinging SPY, this one was more of it just seemed like the thing to do. Like, where do you get 20 years? No, let's do 5 year. Pandemic happened in late 2019. We get up to February, then big drop. Well, everything up to that point, or after it, it's just a big bubble happening. And how people like their round numbers, and we're starting to get a little bit better in the pandemic and stuff. So I'm thinking this right here was the crack, and that should be enough for it to gradually get to a point where it's supposed to adjust. And since it's the overall market, and you're looking at the individual components, and this is just a collective of all those individual components, but they're all connected. I want to profit off that downtrend. Are we in a bear market yet? No. Usually when you are in a bear market, you don't know until you're in the bear market. And so this looks like the start of it. And so I'm just trying to guess on what's the next big pool like this. This is a $60 drop. And then, from here to here, this was I think $15 drop. That might not look like anything when you compare it to itself, but you go to options, that's a good 200% right there. And
yeah, we'll just leave it there. So pretty much with that, I was saying you can leverage this SPY around the earnings, around the Fed announcements, around like all kinds of news and like pieces of weighted information that are going to influence this SPY, which also includes like the war, like all these things that are going to affect this in the short term. And you can make money off of that short term. And so I've been using this as my training ground for observing the overall long-term trend, which is kind of obvious because we're overextended in the bubble. Inflation rates going up and fear of investors and stuff going up and everything like that. Overall long-term trend going down. Medium or intermediate trend, I want to say it's sideways, but it's actually going like up because of, I don't want to say patriotism or something, but there's always more incentive to go up than it is to go down in the US market, as everybody's like, you know, in US we trust type stuff. And there's other reasons, like, but the main thing is overall trend, like long-term trend going down. Intermediate trend kind of slightly conflicts it, but when you get those bad news that come out from like the top companies or like, you know, the government facilities that have a, you know, a good say, like, oh, we're in the transitory kind of position, we're gonna make inflation rates go up this big, and like, you know, they're talking a good game before they even do it. That whole perception that you get from those announcements, that anticipation of the earnings and the adjustments and everything like that, I'm trying to trade around that news because that's how the stock market works. Like those small rumors, they all add up to that short-term to intermediate trend, but the overall long-term trend, that's king. That's pretty much the pattern. And this is one of the obvious patterns because we are way too overextended to the point where, yeah, that's all I'm going to say about that. That's what I was trying to say in that snippet. I'll finish it a little bit. No, actually, I lied. I'm going to go to the next one now. I'll tell you what the person just asked. He said, hey, small caps are gone. When they come back, are the volume ranges and everything going to be the same? And I told him, each year the statistics for that year is going to change, and that's why you have to track, you know, like 50 to 100 samples and see what is the new normal, what is the new tendencies, what are the popular times and stuff like that. The whole concept of like opportunity is in the pattern, and you still have to separate your self-worth from money and all the concepts that are based in psychology, they're still there. That are based in like, you know, profit margin and range, they're still there, but that range might not be 100% plus anymore, because that money is going to change, the value is going to change. It might be in the 50% now, but at the end of the day, you have to shoot your shot to kind of see, unless you're just tracking a whole lot of samples, and then just go for whatever you want to focus on in terms of like what that setup is. Now, let's see what I said this morning.
The psychology and everything is still there, so the patterns are going to be there, but you do have the right thing in mind. Instead of having that normal wait till 70%, wait till like 100%, yeah, we might be going back to things being 50% for a while, until like the new cycle of traders and stuff come in. Main thing is we want to see an actual like stability. Right now, this isn't stability, this is like volatility, and I don't think we'll find something stable until this does drop to like the 330s and we start uptrending again, like something like that. The main thing is the perception of like the investors, because remember, the penny stocks is its own area and it's supposed to be like extremely like limited. Yeah, but you're right, the adjustments will go into like smaller ranges, smaller profitable profit margin. Yeah, have a smaller profit margin. Good thing I went over my 2018 and 19 notes, and I still have like the translation of them, so it shouldn't be that bad. The thing is, we don't have data for this year, so you're supposed to wait like a month to like 3 months, get about 50 to like 100 gap ups, and see what is the general trend and tendency of that year, in terms of like range. What time do people normally, you know, try to invest and pull out and stuff like that? You know, your normal statistics, and then you start going in. But if we try to put any data in now, it'd be too scarce to actually give us like an accurate correlation of something. That's it. Other than that, Well, there is stuff out there that's tradable like now. It's just it's a lot riskier than what we've been doing. So it wouldn't be worth it. Like it got to the point where we're in options right now and trying large caps. So yeah. I wonder how the people in like long chat rooms are doing.
All right, so past Dantes touched on two really important points. One, the range is like going down, but that's not really the point. There's still opportunities out there. It just might be more on the long side. And again, that's like that intermediate trend that you can follow. And one of those things I wanted to point out is normally you would track gappers like throughout the year. And that's supposed to give you like an overall, this is the tendency of like how much money, how much demand there is in terms of like this area of the small cap. And you can track that in like bulk. And as long as you can, you know, get out before everyone else gets out, you make whatever the profit margin is between like the general mean before there's some type of, you know, pullback to the mean. And, you know, that's what you're doing in trading. Like there's the overall trend, and then there's some days where it's like overextended, and then there's some days where it's like underextended. I don't know if those are the right terms, but the thing is, it all reverts back to the mean. And if you can get a good idea of what that mean looks like, then you can see what the profit margin looks like when it's overextended. Take your shot and get out of there and like be happy with what you get. Now, if you do it to the point where you start mastering that like profit margin, then you can start putting down real money and then come back with you know, it will look like small percentages, but they'll add up depending on, you know, your skill around it. Now, other than that, the second thing that was mentioned, longs. Normally, I only talk about shorts. The longs and the other strategies out there that aren't just based off of like, you know, having a really overextended gap, you can still look on the daily and find those overextensions. You can still look for plays that have like a resistance that will pretty much beat down something that goes up 50%. Because remember, that's what a bounce short used to look like before, you know, it got steroids during quarantine. And now, since we're going back to that 2019 volume, like at least during this dead spot, it could, you know, go back. You just have to remember the concept and adjust. With this one right here, you have AGR, and like 250 individual resistance in the past. And recently, yesterday, it went up to 204. And, you know, that's an easy trade right there. But the thing is, it's not enough extension to show up on the daily. And like with that in mind, you would pretty much have to track and hold these in your watch list and wait for them to get to a certain like portion of the range. But when they're so big compared to their market cap and float, because like this ARGI, this market cap and float is you know, 12 million and 25 million market cap. Those are pretty small and like very easily influenced. When you see a lot of volume in the past and then, you know, it gradually goes down, you're waiting for that to come back up and test that area. Someone pointed out to me that, hey, this AGRI is going up. And at the time, you know, it just came from like 150 and I got wind of it at like 180 or something. So that's only 30 cents on a $1.50 stock. And so that's nothing. So that's not going to show up on the gainers and losers. And if it does, it doesn't have enough extension to be like worth my time. But at the time, the dude didn't say, oh, this is a bounce short. And I checked it out. And like, if I got there earlier, this would have been a really easy home run to where when you see this much volume in that specific market cap and stuff, most people are too scared, especially like during this relative time where the investors are scared, that you knew this was going to fall early. And when it does, you'll at least get like, 30, 40 cents out of this. If you hold it over a day or two, that's easy money. But you also don't want to go in too heavy on this kind of play because it's a $2 stock. But these kind of small plays are out there. And so if you have a small account, this is a great time to practice with this kind of setup, is the main reason I'm mentioning it. Another one would be Hook today. Now, Hook has 23 million volume and 65 million market cap. And it's a healthcare sector. And so that's, pretty volatile fundamentals as well as, sector. Now, when you look at Hook, this went up 50%, similar to the last one. And it has this like layer in the pre-market. Remember, it's relative to this like dead spot we're in. So everyone's trying to use anything at their disposal. So when you see like this and then another drop and it kind of consolidates again, that's bullish. When you see this had a little top and then everything's just going sideways, not generally going down, but going sideways, then slowly uptrends, that's bullish again. And again, it's a $2 stock, healthcare sector, and all this other stuff. There's a lot more bullish factors in this, but you also know that the overall long-term trend is it's a penny stock. At that time, the healthcare sector was going down. This was the top in terms of volume. In that sector. So if you go to the healthcare sector, go to market cap, actually it was volume that day. You go to volume, look at the top spot, Hook took that place. Now, when you start counting, is it going up, is it going down, and stuff like that, you'll see the overall trend is, hey, this is kind of bullish, but you kind of know based off just relative understanding of like what's happening overall that it can't actually go that far. And so originally I assessed this and said, oh, this is really, really bullish. This is going to end at like 250 to 270 until, the longer I started looking at it, the more I'm just like, if I was really in a position, like a very like needy position, which, a lot of people are because they've been waiting, sitting on their hands for a really long time and they just want to do something. I could definitely add an extra 10% on one of these pre-market spikes and, shoot my shot around there. And it did that. And like, that's just another common practice. And so the late day spikes are usually harder to get past. And so like this is predictable. There wasn't much of a morning edge in this, but you definitely could have got something out of that. I tried to call it around 3:00. It actually happened at 2. And that's all I really want to say about this. But like, there's all kinds of little plays. If you have a small account, you can still practice with these. You can still make like progress. It's just they're not as obvious. So those are 2 shorts. Now the one long that we saw was KSCP. This is one where, the float is a micro float. And so that's automatically a bullish sector by itself. Or not sector, but bullish factor by itself. And this specific one went from $27 all the way down to like $6. And during that time, we had a guy in the stream. He said, hey, Dantes, what do you think about this? And I'm looking at it, and the whole time I'm confused because, like, again, I'm only doing short most of the time. And he's just like, I'm thinking about going long. The more I would look at it, the more I would look for, like, what does a long bias on this look like? And he told me this day. And I'm like, I was like, what is he seeing right here? I wasn't seeing the potential ABCD kind of curve on the daily. And so I'm like, okay. If he saw that, a lot of other people saw that. And pretty much it was around this like 750 area. When you see 3 days go back, like back to back, doesn't have to be a lot of volume, just has to be, steady. That becomes some kind of resistance. It's like a consistent resistance. And, volume came in this day and it broke that resistance. And that is enough to, bring in other people that see that resistance right there. And that by itself just attracted enough people to keep this going for a multi-day run. And now in terms of when is this going to hit a wall, I was pretty much saying at the end of like this larger drop, anywhere from like 12 to I like to use the closes as the main resistance levels, but like 950. So that's what we're going for. And the thing is, you see it went all the way up to 10 because it definitely got popular. We were mostly seeing that because we were looking at the daily. Like, this is its bounce before it does whatever new trend. And in terms of like the sector, this is industrials. This is also a micro float. So it's very bullish. And it also has kind of a big market cap, which is another reason why I wasn't expecting this to go back to 27, but something closer to, 9 to 12. I don't know what's going to happen tomorrow, though. But the one thing that was predictable is when it was in this area and these 2 days. Like these dips here, all potential points where you can go long for 10, 20%, because that's what most people are doing. They're going 10, 20% just to get those small gains, because no one knows what's going to happen in the super long trend. But the long trend right now, since it hit this point, and it dropped like, relatively fast, and it's a, micro float. Long trend is this is going up. Intermediate trend is this is going up to sideways, and then short term, it's the people trying to cover their money. And so, you could have just held this, like obviously now, but it also was kind of obvious at this point because it doesn't have a solid resistance to go through. That's all I really wanted to say. Yeah, outside of that, I just wanted to make this video to say there's always something to do in these dead markets. You don't have to trade everything. You could just study, you could paper trade, you can do what I did and go to the SPY. Main thing is you want to keep your skills sharp and be ready for the actual opportunities when they do come. And these are a few of the ways I've been keeping myself busy. And so if you like what you saw, please like and subscribe, and I'll see you in the next video. Peace.